Hey everybody, so in today's video we're going to go over top 10 stocks that you need to watch for next week. I'm going to focus really heavily on one sector, and that sector is going to be energy. If you look at what's going on out there, this sector seems to be on fire, and there's some fundamental reasons behind it. But really looking technically at the charts, which is really all we do here, you really need to start focusing on this group, and not just the oil names, but even these nuclear names. Like they're not stopping. They're correcting, and now they're looking like they're going to go back. So we're just going to jump right into it here. As always, I'll give entry points, exit points, what you need to look for. But we're just going to start here, and we're going to drill down a little bit. And during this, I'm going to show you one trick on a way to use an indicator that people use wrong. So just a little tidbit. But if you see what's going on here, this is URA, and this is the Global X Uranium ETF. And you can go through all these yourself, right? You can go through what's in this ETF and then drill down into the ETF. But this at least gets you exposure to the space, all right? And what you're seeing is you're seeing a beautiful breakout here. Look at this chart, right? Look how pretty this is from this break, okay? And then you come all the way back down, retested, finally gotten above what? The 8-day simple moving average. I use simple moving averages, not exponential. And you can see from here that this is the next level for us to go. So you would think that that's what you're waiting for, right? So I'm going to show you a real quick trick here on why you don't have to wait for that. First off, you see how you're rejected all up here already, right? So you already know that this gap fill is going to maybe be an issue. But here, drill into this and take a look at, okay? So you drill in and you take a look at the weekly. Now the weekly, we already have the trend line drawn because we've been looking at this. But you see this week? So now we know, and this is a really easy way to find a new way to entry and get ahead of people. So, and that's your goal, right? To get in as cheap as possible and make the most amount of money. I mean, that sounds like a good idea for anybody, right? Anybody's going to like that. So 24.45, okay? You could actually use the high of the end of the week versus sitting there and waiting for this. If I get through 24.45 and I have an outside week, the chances of me not breaking that 21 day are pretty much slim and none, right? So just understand that that's what I would be using to get in there. Now my first level, which we did try to get over and reject, and we might, but for us, we're going to be looking at short-term trades considering the treacherous market that you're in right now. And we're just going to say that we're going to look for this to trade up to about $28. If it takes a little longer, you can expect it just to ride that wave all the way up. So that's the first one that you should be looking at. As always, I would subscribe to this channel. Every morning we do a pre-market video, and it's about an hour long. And if you've been watching them, and we set them up for playlists later, but to be notified when they come out, you need to subscribe and click notifications. But people that watch the one on Friday should have had a very good day on Friday with the BNTX and mRNA shorts. So let's just keep going here. Next in this space, CCJ. So this is another name, and these are not names I usually play, but I go where the patterns go. So you just might want to remember that, right? It's not about the names that I trade, it's about what the market's telling you. So everyone could see that trend line, okay? A couple things that we're going to drill down to in here that I think are pretty relevant. The very first thing is, see this bar right here? Okay, so you essentially touched the 8, bounced off of it, right? And encapsulated that bar. And that's exactly what you're looking for, right? That's exactly what you're trying to do. Now, you could say, oh, we're going to use the higher high. All right, well, that's the weekly, okay? Let's go to the daily. Okay, so what do I need to wait for on this one, right? So let's just walk through this again so you can see the difference, right? See the difference where you're looking at this price rejection, right? Because wicks are price rejection. We know that from the candlestick video that we've all watched that I did that explains how to use candlesticks correctly. I will link that at the end of this video. If you haven't watched that, I would watch it. So see where you're at? What do you need to do here? You need to do one thing. You're 9 cents away from doing it. You're literally 9 cents away. And look where that would take you, right into the middle of this bar. And as we know from trading, we know that if we get into the middle of a long, red, nasty bar, what happens? We have the potential to get back up to here. So I could get up in this. If I close below the 21 day, I get out of it, and there's 2 points here. Now on top of those 2 points, okay, it seems to me that energy, for whatever reason, if you take a look at, and I don't usually do fundamental talk, but I'll give you this tidbit. Look at how Bank of America and Goldman Sachs have come out and talked about how they've seen energy go into the end of the year. Okay, they know more than I do when it comes to the fundamental side. And they're raising their energy prices on oil pretty drastically. So you're going to see the entire space have a decent move on that. So it's really going to be energy laden, in my opinion, for the next month. I think is where you're going. Look at this one. There's another great one, MTDR. So this was one I had an interest in, but it had to do one thing. To me, it had to do one thing. Everybody trades differently. But to me, this MTDR had to do one thing, and we've done it. So what I was really looking for here was a solid close above on the weekly. And I'll show you why. Okay, so you see here, right, as always, just bonk city, right? Bonk, bonk, right? Gets over, bonk, bonk, and then breaks. Tries to get through, doesn't. Next bar, emphatically. So this is what I was looking for. I wanted a higher high above this. I was more interested in this higher high and then closing on Friday. If that means I have to pay up, so be it. I don't care. I'm more interested in making the most money that I can make, not just being right is the best way to say it, right? Now, if you look at it from this perspective, MTDR, okay? And that's your monthly chart. Okay, what happens when we flip upper channel levels? People that are part of my trading community seen this at least 10 times now, right? In the short time I've been showing this. It's very clean. We did this with UPST, right? It worked there. Okay, in November we did it, or December I think we did it with Tilray. Like, this trade works, and it works on all time frames. So you have to look at this, and this is why I suggest to you to look at multiple time frames, because this paints a completely different story on the monthly than someone looking at this and going, oh, it went from 30 to 39, I'm not interested. No, I just completed the cup. We might get the handle and then go, right? So that's what I want to watch. For me, this is a very simple trade, right? You're basically looking to clear the high of this. Again, price rejection on the wick, clear that, and then use this line right here as your stop. You're looking at being in 2 points, and you could make 20% on this, right? I'd be surprised if this doesn't have a 10% move associated with it here. So, or I'm sorry, a $10 move associated with it here. I think that this could go. Usually what you can do is you can count. This is a really quick, rough way of doing this on how to determine a target price. Count from here to the bottom of this, okay? And there's your percentage, right? Because the deeper the base, right, the deeper the cup, the bigger the move on the breakout. They almost become mirror images of themselves, or enantiomers, where that you can flip them, right? And that's where you could go, right? So like this is the median line, if you think about it that way, and then it could flip up to that level before possibly reverting back down to the median line. So just one way to think about it. So this has a lot of potential, and it's just beginning, and I like that for a longer term trade. Here's another one that's just starting, in my opinion. So let me squeeze this down. And you can see that we're doing things a little differently, where I'm using months. And I'm using the months for a reason. We're at the end of the month, but at the time of doing this, there's 1 day of trading this day. But look at this 1478. So if I can clear this, okay, 1478, I'm at an all-time high. Now, you would look at this and go, well, look, I'm up so much. And so you go back on your daily, and it doesn't really show that, right? It doesn't really show this line. Again, multiple time frames, massive key to success, looking at multiple time frames. You go back on the weekly and you see these lines. Well, isn't that convenient? The top of this, which we were just using on the daily, just happens to fold perfectly there on the opening bar of that week. Okay, so multiple time frames. Just try to remember that and try to do it at the end of every week. Now, that said, how do we make money off of this? I'm waiting for this. Because if I can get above that, okay, 1478, if you can get above 1478, okay, what you're looking for in METC is really very simple here. You are looking for this entire base, again, just like I said, to flip. So it actually seems to me, and people know this from some of the names I started putting into our newsletter, and there's a free version of the newsletter in the subscription, in the description. So I just want to point this out. Like, this is one that we just started, right? And if you just start looking at what's going on here across the board, this is just, in my opinion, starting. So I don't know the fundamentals behind it. I don't want to argue the fundamentals behind it, but this to me seems like it could have a lot of room to go, right? I mean, if I get back up to here, those stocks are going to explode, and that's a 20% move. So just consider that for that space. Energy looks like it's absolutely on fire. So this trade's a little different. Okay, and this is really where you're looking at a bottoming kind of trade. And there's two tools that I usually, use only really for pullback trades. So there's two tools I'm going to show you on this trade that have me having an interest. And we'll get rid of this on the day. So what I would focus on here, okay, is see how you've gapped here. Look, let's get rid of this for a moment. Gap down, gap down. Okay, this gets exhausted, okay, after a while. You can only do this so long, right, where you're going to gap to these and then you're going to find some buyers. Well, it seems to me that you're starting to find some of that in this area. So there's some kind of tools, like when you look at that, you're like, well, the hammer, and I want to flip over the hammer, of course, before you'd even consider putting this trade on. But that kind of looks like a Morningstar pattern, right? And for us that watch that candlestick video, we know this. So let's just look at this. Okay, so if I look at those moving averages, that doesn't tell me anything. Okay, well, one tool you can use when you're in a correction market, and as people should be aware, they are in a correction market. Okay, that is what you are in. You can use the 100-day moving average. Okay, and by using the 100-day moving average, it'll give you an interesting read on where things are. Now, you could also use this little tool, Bollinger Bands, okay, but that's not going to be as exact. So what I'm looking for is extreme moves. Extreme moves can be determined by using a 100-day moving average. If I move to that area within a very short period of time, let's say that I move to a 100-day moving average within 5 to 7 trading days. So you might want to remember that number. You might want to pay attention to it because that's a good spot. So 100-day moving average, 5 to 7 trading days. Trading days. Okay, if you get to that level, you might want to start paying attention to it. Okay, really quick thing to remember. Now, what else could we use? Well, I'm not a huge fan of this tool because it's a lagging indicator, and I really don't like lagging indicators. But I'm a huge user on pullbacks of histograms. So you use the histogram. Now, the histograms are relatively simple, right? The histograms in and of itself are just the histograms in and of itself are looking at the MACD and the signal line. Okay, that's what this histogram does. So essentially what this histogram is doing is giving you the distance between the MACD signal or the MACD and the signal line. Okay, that's what it's doing. It's giving you the difference between those two lines. And what you're looking for are a couple things. One, you're looking for exhaustion out of it. And two, you're looking for another event where it was a massive sell-off and how it responded to that event, right? So you're looking for comparisons, very similar to what we would see with what, right? Which we sometimes we see this with the RSI, right? So if you look at this and you compare this level to here, so this was last March, okay? Let's keep going. Okay. This was the pandemic. This is where you were in the pandemic, okay? So look how under the pandemic that marked the bottom of this move. Look where you are now and how far you've fallen and how fast you've fallen. This was a trade we did before in the trading community. So the thing about this is now I have a 100-day moving average. And all I really need to see, and just understand this about histograms, the reason I'm not a fan of MACD is because you have to wait for this to turn to get a signal. Because you're not going to know that this line's getting closer to here unless you use a histogram, okay? And that's really what you want to see. You want to see the MACD line and the signal line get closer. I don't care about this turn. By the time you're looking at these turns that people trade, the bottom fishing's over, right? It's over. It's done. So there's no, to me, I'd rather use other tools. But for falling down and collapsing, as this has done, right? You're from 900 to 740. Nothing's changed in 5 days company-wise. But what you want to start seeing them getting less and less and less. Now, with that said, with this one, this is really simple. I'm looking to flip the 100-day moving average. I'm looking for 745. I am not looking for this to go back to the highs, but what this could do is put you in a position that you have a trade. Okay, and that trade could lead to up to here, 817. Now, this might be a great spot to buy it for a long-term trader to hold on to it and see if you get back in here. You know, without ASML, semiconductors really don't exist. So, you know, it's a very important company in technology. So they're going to be around. And you want to, you know, see how you respond to this level and go from there. But you really want to watch that. And so I would, again, MACD and 100-day, and you might want to watch that a couple times. So if you're interested in learning on how to trade. So let's get through this. And so I watched this one on Friday, and I kept waiting for it to kind of come in. And I don't know if this is moving because of the Merck news or why it's moving. And frankly, the way that I trade is I really don't care, right? I just care that it's moving. And I care about pattern recognition because that's how I make money. So I went and looked at this on the weekly, and this is where you opened on the week. This is where you closed on the week. Well, those familiar with this pattern would recognize this as almost a dragonfly, right? Not only does that mark the bottom, but this is also inside a morning star, right? So if I flip the top of this level and get through 44.50, okay, my first target is to get to 48.20, and that's just off of this Morningstar pattern. Now, once you're up there, okay, let me just put this line here so people can kind of see where I'm at. Okay, you can kind of see what's going on up here, right? This is where we broke out, but we rejected, and we really can't get above that line. Bonk, bonk, we rejected twice. So if we flip this line, you're going back to these levels. Okay, that's what's going to happen. You're going to go back up. Maybe you get back up to here, but let's just say that you can get back up to 60. It's doable, right? It is doable if you break this. If not, you get in the trade, up in the trade, and then you can use your stop, or you can just take the quick money and move. But I like this a lot, and I like it at the level I just showed it. No, I don't think it's over because you have a one-day hit. I think you're going to have to watch this. And you're going to have to, be really tight with your stops considering the kind of market you're in. So S is one that hit for a couple reasons. And let's just kind of walk through a couple things here that I think are important. Okay. So look at that line right there, 54.05. Okay. So this was a high peak where we saw selling. And then we tried to get over it, bonk, tried again, bonk, right? What happens when you flip a resistance level? It becomes support. Okay, notice that was support here, right? Broke here. Did it stay down? No. Where did it open? On the support line. Okay, so this is very interesting to me. Now, the other thing that I thought was worth noting on this MACD, and I just mentioned this when we were going through ASML, when you're looking for stocks that are pulling back, I can throw the 100-day moving average in here, maybe. Now, I think that there's not enough data points yet. So what you want to notice about this is that this histogram, forget these lines for the time being. See this histogram? See this bar here? See where you're at this level? Now you're at this level, right? So this was -2, now you're at -180. Okay, where were you over here? Right? You see where I'm going with this? So this is starting to turn. Okay? That's what you're looking for. That allows you to know that you may see something like this in a couple days. Again, I'm not interested in the cross. By the time the cross happens, the stock is up, right? And I'm doing these for trades because that's the kind of market you're in right now. You're in a trading market. Hit your single and get out of the way is essentially the kind of market that you're in right now, okay? We've all seen it. We've all been buying stocks, and there's no follow-through. I do think there will be follow-through in oil and energy to the end of the year, just because I think that that's a larger macro issue. So I'd focus there if you're looking for longer-term kind of trades. So this is one that we've been in for a while. Let me get rid of this. We've been in trading this one for a while, and I think there's a trade setting up here. Now, if you look at this and you get rid of these indicators, what you'll notice is that you're in a bear flag. So most people will be like, well, that's not really something I want to buy. And I understand that because bear flags are, of course, bearish. And you have this little move right here. But is there any other indicator that we could be using that could determine that maybe we're not in bad of a spot as we think we are? So we can go look at a weekly and see if that's going to give us anything. And essentially it kind of does, right? What it's telling us is that, yes, you're in a small bear flag, but you have a large weekly bull flag right here, okay? And what we're noticing on this level at 126, if you took this level and went all the way across with it, is we'll start to notice a pattern, okay? And that could be drawn a little bit better. It's really 126.43. Let's get to that. There you go. Okay. So look at how many times we've closed over that level. You've never closed over it, right? It has not happened on the weekly chart. What level do we want to make sure that we close over if we're going to stay in long term? We want to make sure that we close over that level. So this would be our target price because this is where it rejects. Everybody should be able to follow that. Resistance points, they can be used that way. So all I'm looking for here, okay, is for this to break out above this long-legged doji right here. Break out of that, and then I'm looking for it to trade up to here, okay? I'm simply looking for a trade. There's 6 points there, I think. And I think it's there. And that takes you right to the top. Isn't that interesting? It takes you right to the top of that opening, right? So it's why it's so important. I can't stress this. Multiple time frames, okay? As always, if you find value in this, please do me a favor and click the like button and share this video. My goal is to get in front of as many people as possible to show them what it takes to actually truly be successful in trading. So that's why I do this. So let's just talk about this, okay? Yes, it's a small name. I know a lot of people are playing it. I can use these averages, but is that really adding value? Well, we know we're above them, right? So we can leave the 8-day just to leave it there. We know we're above the others. We know when we break that 8-day that this move's probably over, right? So maybe we could use RSI and see how that's going. Well, we're still up there on RSI, so that's good. Does MACD offer us anything? Not really, no, right? Because it's not really that kind of trade. It's not really that deep of a pullback. So what we would have to focus on maybe is look at something like volume by price and see if that gives us any indications on what's going on here. Well, it does give us a little indication on a couple things, and let's talk about this. So it does give us indication that below us is the point of control, and below us is the VWAP of all this trading that's been going on, right? So what is that going to do for us? Well, it's going to give us an indication of where our key levels are. But I think what else it does is it shows you where volume's been going. So if you were to look at this a little differently and not just look at this chart and this wild wick, and you were to look at where you have supply right in here, right? Isn't that kind of convenient how all the supply's right here? Right at the low, right at the low, right at the low, right? So you can see where your base is on it now, right? Let's take the high of this, okay? So you take the high of that bar. So there's your trading range, okay? I don't even care about the top of this bar. If you get through 344 again, this probably turns and goes, okay? That's 9-10 cents off of the 354 high. You could wait for that. But I would look for this, and I'd watch this very closely and see if you get a reversal. The fact that we've now tested this level 3 times leads me to believe that this one's not over, that this could have another move higher. And I would use 344 as my level, because I'd want to be in sooner than later on this. So, and where that goes, you know, you'd have to overlay fibs to figure it out. Maybe we should do that really quickly, clean out these levels. And we'll just overlay fibs. As everybody knows, you use the swing high, and I would use the breakout bar where it really started, right? That's what I would use, right? And what you'll find about doing that, come on. And what you'll find about doing that is it will give you an indication, and sometimes it just sits so perfectly. So I don't know why you give me a hard time. There we go. Okay. So let's take a look and see if that's telling us anything. Well, it kind of is, isn't it? Look how it's just sitting right in that area, right? Look how it acted when it finally broke above this. Look how the bodies of these have been here and how this line was rejected, right? We can see how this is actually adding a little bit of value. So the first target obviously is going to be up here, 485. Your second target is going to be 589. Where this goes from there, nobody really knows. But you could use those as targets. Your return on investment is risk versus reward is pretty crazy. This one is pretty interesting to me. Okay, so FLL is the symbol. And let's just go through this. See this point right there, 1192? So what we would do is now we'd go through this and we'd look at what? A weekly chart, see if that adds any value. Well, this is as far back as we go, or is it? Let's go look at a monthly chart and see if we can find any other data points. Well, we found some data points going back a little further, right? We found these, okay? And then we can kind of see, how did we respond to that? Well, pretty good, actually, when we came back and tested it. So in other words, we came back, tested major support, held major support, and then, right, had a little morning star, broke above here at 9, and then we just kept on going. Okay, well, that's interesting. So what is this telling us? Well, it's telling us that if I flip this level, I'm probably going higher. Now, if we're going to look for that level, what we want to see now is how are we going to respond to that and where's that going to take us? Well, for me, I would go from here from 12, let's say you count this down to the low here, 5.5. You could see 5 points. You could see $17, $18 fairly quickly on this, okay? Your moving averages are going to be great, so they're not going to really add any value, right? You're at the top end of the chart, so there's not really going to be any value in looking at volume by price. MACD will offer us nothing. So it really boils down to a couple key things, right? The number one thing that you're going to have to focus on, and you can throw the RSI in just to make sure it's lined up, and this is pretty lined up. So, and I'll stress this. I did an RSI video, but I'll stress this. I don't care that I'm, quote, overbought. You can stay overbought for months as this goes higher, okay? For months you can stay overbought. What I'm really interested in is if I go back, how do I respond to these large moves in volume? How do I respond to them? And the answer is I respond pretty well to that, and I continue to move over time. So for this one, you're looking for 1192, okay? And then you'd be looking for roughly 5 to 6 points of upside, and that's how you could view that one. Now, if we got rid of these lines for a moment, and if you just want to kind of see something, you could also, considering that you've never been up there before, you can just very simply use this as your high, and then just use the low of the base, which is right here, and that'll give you other data points where you could get stopped and run into issues, right? Smaller ones. But longer term, I think that these are not going to be as big of an issue, and the reason why is the depth of the base. So that's it in a nutshell. Everybody have a great day. Should you have any questions, simply reach out or comment. I'm always curious to see which one people find the most interesting. So that's it. Have a great day, everyone.